SpaceX, ticker SPCX, went public on June 12, 2026. Within 4 days, the stock had already shot up about 62%, briefly pushing its market cap to $2.85 trillion on June 16th. In less than a week, SpaceX briefly leapfrogged Amazon and Microsoft. For context, Amazon took about 27 years of public trading to get to that valuation level. But here's the thing, the rocket launches and Starlink internet service, that's not what's driving the real excitement right now. It's the Neocloud bet. SpaceX is moving into AI compute leasing, and big chip suppliers like Nvidia and Intel are watching this very closely because it means sustained long-term demand for their hardware. Now, as of June 24th, 2026, SPCX is trading at $156.11, down about 18.9% from its post-IPO highs. So the first question every investor needs to answer is that dip an opportunity, or is the air just coming out of the hype balloon? Find out in this video. This video expands on my recent article for Barchart. The link to read it fully is in the description. If you're into stocks and markets, hit that like button and subscribe for more breakdowns like this. Let's get into it. Now, the reason investors are willing to pay that premium comes down to one word. That word is Neocloud, and it's going to dominate the SpaceX conversation for the next few years. SpaceX isn't just flying rockets and beaming internet from orbit. They're building out AI-ready compute infrastructure and leasing it to enterprise customers. Think of it like AWS, Amazon's cloud division, but running on top of SpaceX's satellite network and data infrastructure. That's the vision, and the market is absolutely in love with it. Now, on June 24th, 2026, the most significant deal backing this thesis is SpaceX's agreement to acquire Anisphere, the company behind the AI coding assistant Cursor. The deal is an all-stock transaction valued at $60 billion, expected to close in Q3 2026. SpaceX is buying its way into the AI software layer, directly competing with Anthropic and OpenAI in self-writing code tools. Why does this matter for the Neocloud story? Because Cursor doesn't just sit on top of the compute platform, it becomes a reason for developers and enterprises to run inside SpaceX's ecosystem. It's a classic infrastructure play. Own the pipes and the software. AWS did it. Azure did it. SpaceX is trying to do it in 6 months, and to fund all of this, SpaceX launched its first ever investment-grade bond sale after the IPO, targeting at least $20 billion in senior unsecured notes. Early demand from credit investors? Strong. The proceeds are earmarked to refinance bridge loans from the IPO and to keep spending on rockets, satellites, and AI infrastructure. So when people talk about SpaceX as just a rocket stock, they're missing the plot. SpaceX is trying to become an AI infrastructure and Neocloud giant, with Cursor on the software side and Starlink plus new compute clusters on the hardware side, funded with both equity from the June 2026 IPO and that $20 billion bond stack. Once you see that picture, the crazy valuation starts to look a little more logical, and that's why we now need to talk about the actual financials behind it. For the quarter ending March 2026, SpaceX posted $4.694 billion in revenue. That's sales growth of 15.42% year over year, which is solid for a company this size. But, and this is a big but, they also reported a net loss of $4.276 billion. Net income growth, negative 709.85%. Yeah, almost negative 710%. They're spending money at a breathtaking pace. Operating cash flow came in at $1.047 billion, but that's down 84.57% from the prior period. Net cash flow hit negative $8.516 billion, a drop of 162.51%. So SpaceX is burning through cash faster than its Falcon 9 burns rocket fuel. Now the balance sheet gives you a slightly more optimistic read. Total assets as of March 2026 stood at $102.094 billion, up 10.88%. Total liabilities dropped 24.52% to $67.561 billion. That means they're funding a massive infrastructure build, rockets, satellites, AI compute clusters, with a cleaner liability picture. That's actually encouraging. The valuation though, the stock currently trades at a price to sales multiple of 129.54 times. The sector median, about 1.19 times. So SpaceX is priced at over 100 times what the average company in its peer group commands. The market isn't pricing in what SpaceX does today, it's pricing in what investors believe SpaceX will become. So what are the analysts and big money actually saying about SPCX right now? 9 analysts cover SPCX and the consensus rating is moderate buy. The average 12-month price target sits at $221.20. That's roughly 42% upside from the June 24th close of $156.11. The most bullish call came on June 18th when Arete Research started coverage with a buy rating and a $401 price target, the highest so far. The analyst there highlighted upcoming Starlink 5 3 satellites on Starship as a major capacity booster for data services. Near-term numbers still carry weight though. For the June 2026 quarter, consensus estimates point to an EPS loss of about 18 cents, a sharp deterioration year over year as spending stays ahead of profits. On the positive side, on June 22nd, ARK Invest added another 210,121 shares across its funds, including 131,837 in the ARKI Innovation ETF. They've been consistent buyers since the IPO. That brings us to the key takeaways and where I land on this. Alright, here's my honest take. SpaceX is a legitimate long-term story, but the entry point matters enormously. At approximately $156, you're still pricing in massive execution on a business model that's only months old. If you're a long-term investor comfortable with volatility, the Cathy Wood approach, buying in tranches on weakness, makes sense. If you want proof before you commit, wait for the June 2026 earnings to drop and look for early Neocloud revenue data that shows the thesis is actually converting to cash. This is not financial advice. Always do your own research before buying any stock. Past performance does not guarantee future results. Now, if this breakdown helped you understand what SpaceX's Neocloud move actually means for SPCX, Nvidia and Intel, smash that like button, subscribe, and hit the notification bell so you never miss these breakdowns. Drop a comment below. What do you think about SPCX? Is this the next AWS story or the most expensive hype cycle of 2026? And tell me, which stock should I cover next? I'll see you in the next one.